I think these tariffs are important, but the impact has been grossly exaggerated. If you take a look at the impact on retail and then move to consumers overall, let's start with retail. Retailers will respond. Many have already moved their supply chains. The first thing they're going to do is go to their suppliers and go 10%, not that much. Give me a break on the price. And they're going to get a lot of breaks on the price. Second thing they'll do is look to manufacture elsewhere. Third thing they'll do is alter their assortments and not carry the things where they don't make as much money. And the last thing they'll do is pass some price increase on to consumers if they have to. But they're not going to lose money on this in the end. So those stock results that we saw yesterday, they were just, in my opinion, just absurdly extreme. So in terms of the reality for retailers.
In the case
of, take a look.
Yeah, I was just going to say, so people know what we're talking about. I mean, Best Buy was down, 8-9%. We see Steve Madden is down big in today's session, even by about the same amount. So people, you could say, are just worried that this 10% is going to go to 25%. We've seen that happen before. If it goes to 25%, is that a different story?
I think there's a point at which that it starts to hurt. But even that, as long as there's a little bit of time to react, retailers will react on the lines that I just outlined. And even if there's not time to react, you're looking at a 1 or 2 year impact before everything gets reset. It's not, retailers aren't going to swallow these increases in prices and then lose money on what they sell. That's absolutely absurd. Meanwhile, look at it from the consumer standpoint. The $300 billion in goods that we're talking about here, they represent a small percentage of the total $14 trillion in consumer spending in the U.S. And I did some calculations, ran a little model. My estimate would be that even if prices on all those goods increase by 5%, and I don't think that's going to happen for the reason I outlined, then the impact on the overall consumer is something like a perceived inflation rate of 1/3 of 1%. So basically almost nothing. So I know that it's going to hurt some specific players. There's some specific parts of the industry that are especially concentrated in China. But capitalism is fluid and will react to this.
So let's go to the ones specifically that you have in mind that might be the more vulnerable ones. There are, I take your point that the consumer is healthy, but there are a lot more price-conscious consumers in the United States than I think many of us like to think of. And so I would think maybe it's the price-conscious segment that would be hit hardest. Do you agree or disagree?
No, I don't really agree, because I think that the Walmarts of the world, they have the clout to negotiate with suppliers. They have the ability to move fast.
Good point.
Target, Costco, Dollar General, TJ Maxx, these companies can and will respond. Amazon is becoming more and more of a marketplace, so their sellers will just change out. And the people who can make money will stay on the platform and will do great. So I don't really see those people as being hard hit. However, retailers that are already very weak, particularly department stores, people who have, someone like a JCPenney, a high concentration of own label merchandise, heavily manufactured in China, they're going to have a lot of trouble because that is hard to move very quickly, and they're already in a weakened position.
Interesting.
So, just like what's going on in retail as a whole, the department stores are in trouble big time. The last few monthly retail reports that have come out from the Commerce Department have looked terrible for department stores. Apparel in general, particularly any mall-based apparel, is really on the rocks. We probably have 2 to 3 times as much physical square footage in the United States as we need, given these shifts that are taking place. And so the weak companies are going to have to close stores, have to go out of business, and let's move some of them to do it more rapidly. But don't exaggerate the impact of just this 10% on this one tranche of goods. That alone is not the bigger picture. The bigger picture is the shift from bricks and mortar to e-commerce, the traffic that's just crashing at the mall, and the shift in consumer consumption away from apparel and towards hard lines and more discretionary expenditures like for entertainment.